This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil, and wanted today to follow up on last week's video. I spoke about what it takes to see the difference between a pullback and a change in trend. And some of you might now be wondering, what is the use of a 1, 2, 3 shift in trend if it's not really confirming evidence? Today, I want to show you why that is such a powerful tool when you're using multiple time frames. Let's go ahead and get into the chart here. I want to give an example. This is Rambus, and on the daily, I've got the daily chart on the right and an hourly chart on the left. Now, as I mentioned last week, just to bring us up to speed, so if I've got a stock that has moved up and broken its trend, tested the high, and then come back down through this low here, that's a 1, 2, 3 change in trend. But we don't have confirmation until we make another lower high and another lower low. So this is really the point here where we get confirmation that the trend is truly shifting to the downside. However, if I'm using multiple time frames and I know that I've broken the trend line, pulled back, and I'm testing this high right here. So I've got evidence here, and notice also at this peak, I've got momentum divergence in place and a lower ADX reading as well. So I've got some things that are telling me that the momentum is potentially starting to shift and the trend is losing a little bit of strength because we've broken the trend line and we've come back up and tested this area. So during this period right here, and actually what I'd like to do is circle this area on so you can see this on the hourly. So now during this period, if I know I'm testing this high and I've already broken the trend line and now I'm testing, so I've got 2 of the 3 changes in trend in place. I can now go down on this time frame and I can see if anything is showing up that is signifying a shift in trend to the downside. So what I can do here is actually look for a change in trend where at 1, 2, 3 change in trend taking place on this time frame. So I can draw in the trend line here, and then I can see we've come down and we go back up and test. Now on this bar right here, we get a big red bar reversal after going to a minor new high. And when I see that, if I see any ensuing weakness after that, I don't really have to wait for the 3, although I can wait for the 3 if I want. As this is crossing back down with this failure, with momentum divergence in place, notice how we had strong ADX here, and then on the rally back up and test, we had no real strength in the buyers. So as this is coming back down, I can look to be aggressive because I know that I've got a 2 in place here and a 2 in place here. So I could definitely wait for the 3. And this is at 29, remember, this is going to be right here on this chart. This is a chart we're shorting. We're using this to improve the timing. I like to use the 1, 2, 3 sequence to help me with the timing into a higher time frame trend. So if I know I've got weakness developing, now I'm showing you a reversal in the trend. You can definitely use this in a situation where you have rising moving averages and you have a pullback. And I want to use a 1, 2, 3 during this pullback to get in earlier using the smaller time frame. But I just thought I'd give you a different example this time where we have a 1 and a 2 in a stock that has, a fairly mature trend, losing some momentum, and we want to look for a reversal. So I use the 1, 2, 3 in this instance to confirm what's taking place because a lot of times the indicators will have a little bit of a lag to them. It's also confirming evidence to the indicators and the moving averages. So this is really how I would suggest you go about using this specific approach to improve your timing and your entry. There's nothing wrong with looking for after we break the 1, 2, 3 here. So we get a 1 and a 2 and then a 3 taking out this low, and then look for a better entry using the 1, 2, 3 on this rally. You could find that on this time frame. So if we go back and look at this on this time frame, we can go drawing our trend line here. And the test was merely just a test of the 18 and then coming back down through, and it actually happened via a gap. But you have confirmation on this time frame that the trend is shifting back to the downside. So this gives you added confidence to know that you have the 1, 2, 3 developing here that can take place here or here. And then in any specific pullback or rally, you can always look for that 1, 2, 3 on the lower time frame to help you with the entry. Always watch the ADX. In this case, we had strong ADX to the downside and no real strength to the upside. Very good setup pattern. And I don't wait for confirmation in this situation where I know the trend has shifted to the downside and I'm just looking for confirmation that the trend is shifting back on the lower time frame. So I hope this makes sense. Just a short video today. I don't know if you can tell, but got a little bit of a sore throat, so don't want to do too much talking today. So anyway, go ahead and post any questions or comments, and we'll see you next time.